Hey YouTube, this is the Robinhood Investor. Hope you had a great week of trading. As always, I really appreciate your support. So if you like this video, give it a thumbs up. And if you want to learn about investing, subscribe to this channel. Today I'm going to talk about VMware's earnings report this past week. Ticker symbol VMW. Currently priced at $156 per share. As you can see, last Friday it traded up 9.71%. Past year down 12%. Past 5 years up 78.59%. Scrolling down a bit, market cap is $65 billion. P ratio is fairly low at 10.41, and dividend yield is 0, which means they're reinvesting all profits back into growth. Taking a look at the analyst ratings, 62.1% give it a buy, 34% give it a hold, and 3.4% give it a sell. Now in terms of earnings, actual earnings per share beat the expected. So $1.52 was the actual versus expected was $1.20. So it beat by 32 cents, which is very impressive. So about what VMware, what they do, they provide cloud infrastructure and business mobility. So this is very helpful during these times when a lot of people are working remotely. So they provide software-defined data center, hybrid cloud computing, and end-user computing. Taking a look at the financials, you can see year over year from 2019 to 2020, you can see that earnings 1.65 billion versus this year earnings 6.41 billion. So it definitely increased drastically, even though the recent circumstance affected overall economy negatively. But since this is an internet business and it's helping people work remotely, this has been growing steadily. Now taking a look at the financials, you can see VMware, look at the stats. Trailing PE is 10.36, so that's in the last 12 months. Versus forward PE is 21.55. A little higher, but it's still relatively lower than the S&P 500. Scrolling down a bit, you can see 52-week change down 7.57% relative to S&P 500 52-week change 10.93%. Now all-time highs this past 52 weeks was $183 versus 52-week low is $86. Taking a look at the share stats, you can see it's held by insider is 28% versus held by institution 72%. Again, no dividend yield, which means they're reinvesting all profits back into growth. Now for profitability, they are very profitable. Profit margin is 59% versus operating margin in trailing 12 months is 14%. Return on assets, you can see it's 4.33%. Return on equity, 128.4%. Now for revenue growth year over year, that's 13% versus gross profit, $9 billion. Balance sheet is total cash $2.92 billion, which is great to have a solid cash position during these times so that you can easily weather out these conditions. Debt is $6.66 billion and total debt to equity 95. So for every dollar equity they have, then they have $95 in debt. Operating cash flow is at $3.87 billion and levered free cash flow is $3.12 billion. Now looking at the actual earnings call, looking at the slides, you can see that they deliver the digital foundation. They build, run, manage, connect, and protect any app on any cloud on any device. So you can see across these multiple devices, they have traditional applications, cloud native, and software as a service. And across the board for the cloud, they have private cloud, edge, hybrid, telco, telecommunication, and public cloud. Now, in terms of what the CEO said, the total revenue increased 12% year over year, which is very impressive at $1.52 per share. And they have a comprehensive strategy increasingly being embraced by their customers to enable their digital foundation, which is very important during these times when a lot of things are digitizing, becoming digital, people are working remotely. Their products are definitely enabling those customers to do that. Scrolling down a bit, it's all product talk, product strategy, what they're doing during these times. All right, looking at what the CFO says, total revenue grew 12% year over year. Subscription and software as a service revenue grew 39% year over year, which is very impressive for a company this size. And license revenue grew 17% year over year. Within subscription and software as a service revenue, strong revenue performance from the EUC and Carbon Black and Velo Cloud offerings, as well as VMware Cloud on AWS, Amazon Web Service. On-premise perpetual license revenue increased 2% year over year, primarily driven by stronger than expected EUC license demand. And also, their operating income increased 25% year over year, which is very impressive. And Q1 with over 9.2 billion in unearned revenue and 5.9 billion in cash, which is great to have that kind of balance sheet. Let's see, taking a look at what else the CFO said at the end of Q1, RPO, which includes committed and non-cancelable future revenue, up 19% year over year, 54% of which is classified as current. Great numbers. There's software as a service, yada, yada, yada. Revenue was 16% year over year, and total revenue plus sequential change in total unearned revenue was 6% year over year. Saw strong demand for customers for VDI solutions, yada, yada, yada. You can see some more product talk. All right, taking a look at the results, revenue highlights. Their total revenue up 11.6 year over year growth, very solid. Subscription as a service and license revenue up 16.6%. And since subscription and software as a service revenue up 39.2%. Very solid growth across the board for these revenue streams. So software as a service, you can see 21% of total revenue. This, let's see, revenue contains, yada, yada. These are some additional products under their subscription revenue stream. Income statement highlights. So license revenue was 646 versus, 660 for Q1 2021 versus 646, a little higher. Software as a service and subscription, 572 versus 411. Service revenue, that's 1,502 versus 1,393. By the way, these are numbers in I believe they're in millions. So yes, and then operating margin 26.7%, but Q1 2021 29%. So a lot of these numbers are increasing. And net income diluted per share $1.52 versus $1.25. Very impressive numbers. Select financial measures. Headcount 31,645 people work for VMware. Cash and cash equivalents 5.9 billion. Operating cash flow 1.3 billion. CapEx 87 billion or million. Let's see. Unearned revenue total 9.218, so 9 billion. And then long-term unearned revenue is 4 billion. Let's see. Bookings for key products. Let's see, NSX product bookings increased over 20%, increased over 20%. Next one, increased by 10%. So these are all double-digit growth in their product bookings, which is great to see. Core SSD product bookings declined, and then total bookings, core SDCC decreased 7%. So some of the products are doing well, some of them not as well, but overall total was doing really well. Q2, all right, so this is guidance. So next quarter, total revenue 6% year over year, and then subscription and software as a service license revenue 7% year over year. So still anticipated to increase, but not as strong as this quarter. Let's see, operating margin 28% for next quarter. Net income per share $1.44. Diluted share count 422 million. Tax rate at 6%, 16%. And in terms of GAAP tax rate, approximately one point lower to 1 point higher than non-GAAP tax rate. So those are some of the numbers for this past quarter. Overall, very solid financials, solid balance sheet, and solid growth. And I think their valuation is fairly justified. And I think in terms of next quarter, since they're also growing steadily, that's impressive to see. And during these times, since people are working remotely, a lot of things are becoming more digital. VMware will definitely benefit from these transitions. So that's all for this video. What are your thoughts on VMware? Comment down below. Remember to use my referral links below. Both of us get $20 for using personal capital or free stock for using Robinhood. If you like this video, give it a thumbs up. And if you want to learn more about investing, subscribe to this channel. See you in the next video.